Imagine making over $1 million a year and still feeling trapped. That was Luis. High income, 3 kids, house in Palo Alto, but taxes bleeding him dry. So when he reached out to me, he made it clear he was looking for some legitimate relief, but he was not looking for any sort of loophole. So before we dive in, quick disclaimer. The strategy involved in this video is something the IRS calls a listed transaction. And what that means is that it is legal when done properly, but it always receives heightened scrutiny. So it requires expert guidance, and this isn't right for everyone. That's why you always need to consult with a qualified tax professional. All right, so back to Luis. We met at one of those networking events in San Francisco, you know, the ones with the fancy appetizers nobody really likes to eat, and drinks everyone needs, but nobody admits to needing. Anyway, let me set the scene. We were talking near the windows overlooking the Bay Bridge in the distance, and there was some interesting graffiti art nearby. And Luis said, the thing nobody tells you about making good money is how much mental bandwidth gets consumed by taxes. And of course, he wasn't complaining, he was just stating facts. The kind of facts that keep successful people up at 2 in the morning in the middle of the night. So when he first heard about a tax strategy called fee simple donation, his first reaction was skepticism. He told me, I'm not the type of guy that likes IRS attention. But Rich, after vetting all of this thoroughly, it seems like it might be worth it. And guess what? It was. He ended up with a $400,000 deduction, which translated into $160K in tax savings just that year. From a fee simple donation strategy that has been in the tax code for decades. I know this isn't some newfangled idea. It's not some crypto scheme or some loophole either. And with those savings Luis got, love the guy. He took a 3-month sabbatical finally to work on that startup idea he'd been sitting on for years. So here's how all of this works. Luis was an engineer at one of those companies that makes headlines. His wife's a physician, and their combined income is over $1.2 million a year. Of course, we might call him lucky, but their accountant calls him prime audit material. But they're smart with their money. They max out their 401ks. They use the HSAs, do the backdoor Roths. They even have a donor advised fund. But despite all that, they're still writing checks to the IRS for nearly $500,000 every single year. At some point, Luis told me, you realize that just maxing out your retirement accounts is barely scratching the surface of what's possible. It barely moves the needle when you're at this income level. So here's what we did with Luis's situation. He participated in a fee simple donation. And I know, if you're hearing this for the first time, that's a lot of confusing words, but in reality, it just means he purchased an ownership interest in land, environmentally significant land, and then donated it for conservation purposes. And as a result, then got a tax benefit. And this land was carefully selected, ecologically valuable. We're talking old growth. It's a property that developers have been eyeing for years. And I remember him asking, so I'm actually helping to protect real land? This isn't just some shady paper transaction? No, of course not. For people like Luis, knowing there's actual social good happening is important. And that needs to go beyond the tax savings for a guy like him. So I went on, I explained the process in detail. I basically said, picture this. You get an independent qualified appraiser, more than one actually, to determine the fair market value of the land, according to strict IRS guidelines. The deduction is based on the land's value at the time it's donated, typically what a developer might pay for it. And because it's a listed transaction, everything must be meticulously documented. Independent appraisals, legal review, full disclosure across all paperwork. You'll also file Form 8886 to disclose the transaction. Standard procedure when you're doing everything like this by the book. And hearing all the rules and how it all worked made Luis feel comfortable. Once he understood how tightly everything was structured on purpose. Every property is actually vetted. There's no cutting corners, just targeted investments in the right land. So Luis invested $100,000 into the project. And that's real money. That's not pocket change. For him, that investment generated a $400,000 charitable deduction, a 4-to-1 ratio. And I will say it's important to note that actual deduction ratios, they vary by project. And the IRS, they look at these aggressively to make sure nobody's overvaluing anything. So that's why, again, execution and compliance matter. And because he and his wife file jointly and itemized, that deduction reduced their taxable income by $400,000. At their tax rate, over 40%, they saved over $160,000 in taxes. So $100K in, $160K saved, and it hit this year's taxes, not some far off future promise. We're talking an immediate impact. And here's the part that, always sticks with me. Luis didn't blow the money. He didn't go buy like a on sale Tesla or something. Like I said, he used it to take a 3-month off sabbatical from work. And yeah, he finally started building that product, that business he'd been thinking about for years. He told me everyone thought I was crazy, taking leave when I was like on track for another promotion. But that's exactly what he did. And you want to know what? He was on track, but he was on a track someone else designed for him. That tax savings that year, it bought him time. It bought him space. And you know what? For all his efforts, he earned it. And it was amazing. And no, he didn't quit his job. He just needed a little bit of breathing room. And that's the real value of planning, or creating leverage. Not just saving money, buying back time. Now look, is this strategy for everyone? No, I said that before. It's appropriate for people earning $500K or more who itemize deductions, they have liquid capital to invest, and more importantly, it's for people willing to do it properly with full compliance, documentation, and transparency. The IRS scrutinizes these transactions closely. They need to, because there's been abuses in this space from bad actors who've tried to cut corners or inflate appraisals, which is why, again, proper execution is crucial. I'm even considering making a video. I've investigated some of the stories about the syndicators who got in trouble. I haven't made that yet, but what I learned was there is a right way and a wrong way to do this. And the difference isn't in the strategy, it's in the execution, the proper execution. And that's where Gary comes in. He's one of my processing partners. And his team isn't throwing people into funds just hoping they qualify. They review your returns, walk through the numbers, and only move forward if it's a good fit for everybody. In fact, the part that might surprise you, Gary, he told 2 of Luis's friends that they shouldn't do one of these, that it wasn't a good fit for them and their risk profile. And that helps me when I'm making videos like this, knowing there's people out there who aren't some commission-hungry salesmen just trying to, sign up as many people as they can. So I ended up catching up with Luis a few months back. He is still working on that startup idea, but he went back to work after the sabbatical. But he's just happier. He's less burnt out. He's more in control. And yes, he's planning to do the strategy again this upcoming year. But now he's asking me about OCLATs, oil and gas, and opportunity zones too. And I told him we can dive into those strategies whenever he and his wife are ready to talk. So if you're like Luis and interested in a fee simple investment, you need to vet it hard. Talk with your CPA. Get in touch with me. If you talk to Gary, cross-examine him like he's on trial with every question you can think of. I see more W-2 earners, especially with those big bonuses or equity comp, realizing this is a serious option for some serious tax savings. People who never thought they'd care about land conservation are now paying attention. Because once you know this exists, it's hard to unsee it. It's like finding out there's a secret door in your house. It's been there all along, and behind it is the kind of breathing room, the exact kind of breathing room you've been looking for. The hardest part for high achievers is giving yourself permission. Permission to step back, to say enough is enough with the tax bill. But when that psychological shift happens, the results for your quality of life are worth just as much as the tax incentives. That's what strikes me most about all these strategies. Seeing people who are so careful, so skeptical, so diligent, turn into advocates once they understand the financial benefits and how everything works. And the unexpected personal benefits that come along with it too. So if you think you're ready, here's what to do. Get your current tax returns ready for review. Be prepared for thorough due diligence on both sides. Understand that this is a sophisticated strategy requiring professional guidance. Consider what meaningful change the tax savings could create in your life. For example, would you take time off like Luis? Invest in a side business? Fund that family foundation you've been talking about for years? I mean, for Luis, it meant having the courage to start building on his own ideas. Again, finally. But for others, it might be funding your kids' college accounts or just plain sleeping better at night, knowing you're not overpaying on your taxes. Because here's the thing about tax strategy at this level. It's not about avoiding paying your fair share. It's about aligning your financial decisions with what the tax code actually incentivizes. So I invite you to check out the link down below in the description to see if you might be a good fit for this strategy. If me and my team can help get you on the right path to see if you qualify for the fee simple strategy this year, we'll be happy to help. But please don't wait until December 31st. Please don't even wait until October, because by then it might be too late for the current year. Everyone gets busy, right? I see this happen every single year. High income earners scrambling those final days, weeks, months for last minute strategies. And by then, the good opportunities are either gone or the professionals who can help you are just plain too busy to help you right in that moment. So again, check out the link down below in the description. And you know what? Leave me a comment if you still have any questions. I read every single one. All right. As always, I'm Rich, and until next time.